What's up, guys? Ali here from Solid Trade. So I got a lot of you guys messaging me with the screenshot if it's a good stock pattern, if it's a good flag pattern, if it's a good bullish pattern that's forming, should I enter or should I not enter? And a lot of times they're really good and a lot of times they're really bad. And I feel like a lot of people just don't know what is the reasoning behind why the flag patterns form and what things to look for to predict that whether the stock is going to actually squeeze like this. In this case, is going to squeeze up a lot or not. Okay, so I'm gonna do a short video on explaining exactly the reasoning behind the flag pattern, how the flag patterns form, and what to look for to predict whether the move is going to be really big or if it's going to fail. All right, guys, so let's get started. So chart patterns are formed due to certain behaviors. So very important to understand the behavior to predict the next price movement. And once you understand that, chart patterns will start to automatically make sense. So let's go and start looking into it. Number one, flag chart pattern, which is the number one most. It looks like a flag pattern like this. The price looks like this, forms a flag, and then once it breaks out, it goes. Similarly, so notice here this price action, it drew this flagpole, then make a flag, and this looks like a flag, right? This looks like a flag, and then once the flag breaks out right here, there's a huge squeeze. Okay, now the psychology behind is that there's a huge price movement up. Multiple things happen here. Okay, what happens right here? What happens? First thing happens is that a lot of people see this, it comes into their radar. Okay, it comes with the scanners, the stock is going up, and everybody starts talking about it. Okay, at the same time, a lot of short sellers who thinks, oh my god, the price has gone from here to here, let me short the stock. It's gonna come down somewhat right here. It is up a lot, so let me short. However, look what's happening. The stock price is not going down. It's going sideways. Comes down a little bit, goes back up. Comes down a little bit, goes back up. Comes down a little bit, goes back up. So a lot of short sellers are stuck. People like us who are seeing this flag pattern in real time also are ready to buy the stock. Short sellers are getting stuck, so they want to buy the stock to cover their position. Everybody wants to buy the stock, and also here there is nobody who bought the stock right here, so there's no sellers. If there are no sellers, it means that the demand of the stock is going to increase because there's no supply. So it's only demand from all kinds of shares, and that causes a huge move. Okay, so and it in turns makes a flagpole on a result. As a result, it makes a flagpole. Okay, so when you see a flagpole, don't be like, oh, it's a flagpole, let me buy it. No, you have to see what's happening here. You have to realize how much price have come down. If it has come down a lot, most likely the price is not going to go up that much. But if it's gone sideways, the price is going to go up more because lots of people are stuck. The short sellers are stuck in it. Okay, so let's understand a pennant pattern. A pennant pattern is similar. However, in pennant, you see it just price makes like this. So instead of this flag, the price is like this. Oh no, sorry. Price is like this. So it's a pennant. So this is called a pennant, and this is called a flag, right? So there's a little difference here, So you see here, this is called a pennant. Okay, and there's a pole, and there's a pennant forming, and once it breaks, boom. Okay, so we're gonna talk about the trading strategies, how to trade this, but I'm just gonna real quick discuss how to trade these chart patterns. And the way you do, there are two kinds of ways. Either you buy at the breakout, right, which makes perfect sense. You buy at this breakout right here, right? This is just very basic breakout strategy. Or if you once you notice this pennant pattern, you want to buy as close as possible to this line right here. So you can buy it here and expect a breakout. So that will you can get an even huge move, right? So you can get inside the pennant, but if you're getting inside the pennant, you want to get as close as possible to this below line. You don't want to get right here and then the stock price goes down, or like, oh my god, now I'm stuck. What if it continues to go down, right? So you don't want to buy it at the high of the pennant. You want to buy the low of the pennant. That way you have good risk to reward. We're going to talk about risk reward and strategies and risk management in the next later modules. But let's just stick to the pennants right now, and then we're going to go discuss deep into the pennants. Okay, so here's another one pattern. Let's talk about different pennants. Oh, this example I want to talk about is this. This is a flag that happened, a pole happened. If you notice here, so notice here, there's this flag, a flagpole, like the price went up, but instead of forming a flag, look what happened. It came down. Okay, so now the price is not going up anymore. Why? Because all the short sellers who shorted the stock, they were able to get out of it, and they did not get squeezed, or they were not forced to buy and get stopped out above the flag pattern. So it went up. Instead of making a flag and then going, it did not, it came down. So then it does not, now it's not going up anymore, because all the people who were shorting right here, they were able to safely cover the stock. So there's no short squeeze anymore. Okay, so it's extremely important for the price to stay here. As long as it stays here and then it goes, that's gonna be a really big breakout move. Okay, now let's talk about another, this is similar pattern, a pattern, same thing right here, but this is a little different one. It's forming like this. Okay, so it's forming this channel, and then it breaks out, and again same thing, it has a pole, flag, a little bigger flag. You see a little bigger flag, and then once it breaks out, it goes similar. It's a little different. It all comes in different sizes and shapes, right? Price movement is never the same. It's, imagine this, prices are formed by millions of traders buying and selling and buying and selling and buying. Imagine, like, people buying and selling, people buying and selling, and it forms uh, a pattern. And once the pattern forms and it's more visible, then everybody, whoever is, nobody's gonna be like selling here because it's a breakout. So all the buyers align at the same time, or all the sellers align at the same time. That's when the bigger moves happen. Okay, so that's one thing I want to point out. So let's talk about another, cup and handle shape pattern. So a lot of people say, oh, you know what, it's a cup and handle. What does that mean? It forms this cup right here. So notice here, it forms this cup shape, then there's little handle, right? So it makes a cup. So it's like this, a cup and then handle. And then once it forms this action, normally when the price breaks out, it goes up like crazy. Okay, so when the price breaks out like this right here, it goes up a lot. Now, it's easy to say cup and handle. What does that mean? Like, why it's happening? That's very important to understand. So basically what's happening is that the stock price goes up here. Okay, a lot of buyers stepping up, and when the price goes up a lot of short sellers get in to short the stock so that they can make money on the way down. The stock price comes down, great. Short sellers made money. It was a great trade for short sellers, right? And now again, it starts to form a base right here. You see, form the support level. The stock turns around, forming a U shape in the process, and it comes back to the same area where it previously went down from. You see, same area it went down from. So look here how the stock starts to go back down again, which means that it's proving that there's a resistance right here. So all the short sellers again pile up right here to short, to make the stock go down. But in this case, instead of going all the way down, the price turns around, causing all the short sellers to cut their losses and buy their shares back, and that caused a huge squeeze. At the same time, people like us also looking at this cup and handle, we also want to buy the stock right here because it's a bullish pattern, and all stars align, and then the stock goes up like crazy. Okay, the other reason is same thing. Notice here, there is nobody on this left side right here. When the price breaks out, there's nobody on the price. So that means there's nobody ever bought the stock at this area, which if nobody has bought the stock at this area, what does that mean? There is no sellers. Nobody is there to sell because nobody has bought the stock. Any person who has bought the stock, right here, at this price, they're all green because it's above, right? It's above from where they bought. So everybody's green. So nobody's willing to sell the stock because they're all green. Nobody's stressed out. If you're not stressed out, you are willing to hold. Psychology is that you're willing to hold the stock longer. Okay. Here's another happened in hood. Same thing right here. So notice here, this U shape. It's a U shape. And notice here, instead here, where this was a resistance, notice here, very different price action right here. Right below this resistance level, right below. Instead of price coming up and going down, like it did here, look how it went down. Look what is happening here. it is just touching, hitting, coming down, hitting, coming down, not going down at all, but it just touching. It's like, touching, because nobody's willing to sell. Even though it's at resistance, nobody's willing to sell, because that's why the price is not going down. It just stays there. And when this happens, it's only a matter of time once the price breaks out and all the short sellers have to cover their stock, and boom, the price goes crazy. Okay, so this action is very key to understand what is going on right here. So two things would happen. I just want to really like hammer down in your brain. So let's say the price going up and then it does this and goes down. That's one action. Or it goes up, which like in this case happened, it stays like this, right? So anybody who's shorting the stock thinking it's gonna come down, hit the resistance, it doesn't, and then the price breaks out, all the short sellers have to cover the stock. And what happens? People who don't cover the stock, that's why these big green candles happen. Because it keeps going up, somebody's just adding to their losses, and now eventually the account is blown up, and there's the margin call where the broker says, give me all your shares because your account has gone to zero. Boom, cause a massive squeeze. Thank you for watching, and let me know in the comment below if you like this content, if you want me to make similar content, or if there's anything that you want me to add or make a content about, that something that's going to want to learn. Let me know, and I'm more than happy to make the content for you. Alright guys, so hopefully you guys learned something. I'll see you guys in the next video. Take care. Bye bye.